Canada's housing market is doing something it hasn't done in years. It's pausing. Buyers are waiting. Sellers are unsure. Prices aren't crashing, but they're not skyrocketing either. After years of chaos, bidding wars, and panic buying, Canada's real estate market has entered a rare transition phase. Interest rates are coming down. Listings are rising, yet sales remain slow. So, what's really happening right now? Is this the calm before another surge, or the start of a long, slow reset? In this video, we'll break down exactly where Canada's real estate market stands today. What's driving buyer hesitation? Which cities are holding strong? And what experts expect next in 2026? Section 1. The big picture: Canada's market right now. As of late 2025, moving into early 2026, Canada's housing market is neither booming nor collapsing. National home sales are mostly flat. In some regions, they're slightly down year over year. And across the country, one word defines the market: caution. Buyers are active, but hesitant. Sellers are listing, but adjusting expectations. One major shift is inventory. More homes are available than this time last year, giving buyers options they haven't had since before the pandemic. That alone has removed the urgency that once drove bidding wars. Instead of buy now or lose forever, today's mindset is, let's wait and see. Section 2. What's happening to prices? Home prices across Canada have largely stabilized. In many cities, prices are flat. In others, they're down slightly compared to last year. And, in a few select markets, prices are still inching upward. The biggest pressure is being felt in condominiums, especially in large urban centers like Toronto and Vancouver. Higher supply, investor pullback, and affordability issues are keeping condo prices under stress. Detached homes and townhouses are holding up better, especially in family-oriented and suburban markets. But even there, price growth is muted. This isn't a crash. It's a cooling and correction phase after years of extreme growth. Section 3. Interest rates. Why lower rates haven't sparked a boom? The Bank of Canada has started cutting interest rates, something buyers waited years to see. So why hasn't demand exploded? Because lower rates alone don't fix affordability. Home prices are still high by historical standards. Groceries, utilities, insurance, and everyday expenses have surged. And many Canadians are worried about job security and the broader economy. For many buyers, even with lower rates, monthly payments still feel heavy. So, instead of rushing back into the market, buyers are being selective, waiting for better deals, better conditions, or more certainty. Section 4. Why the market feels frozen. This slowdown isn't caused by one single factor. It's a combination. Affordability remains strained. Economic uncertainty is high. Buyers don't feel urgency. Sellers don't want to drop prices sharply. That creates a standoff. Buyers say prices should come down more. Sellers say, I'll wait. And when both sides hesitate, activity slows, even if conditions are improving. Section 5. Regional breakdown. Not all markets are equal. Canada doesn't have one housing market. It has many. Toronto and Vancouver. These markets are seeing the most pressure. Prices have adjusted. Demand is softer, and condos are struggling more than detached homes. Montreal and Quebec City. Stronger performance, steadier demand, and modest price growth. These markets benefit from relatively better affordability and local demand. Prairie provinces. Some areas have performed surprisingly well, especially where population growth and employment remains strong. This regional divide is important. What's true in Toronto may not apply at all in Montreal or Calgary. Section 6. What's coming in 2026? Looking ahead, most forecasts point to modest price growth, not a dramatic rebound. Experts expect slight price increases nationally, more balanced buyer-seller conditions, continued regional differences, no return to pandemic-era frenzy, lower interest rates may slowly bring buyers back, but confidence will return gradually. Not overnight. Government policy, immigration levels, and future rate decisions will all play a role in shaping what comes next. So where does that leave Canada's real estate market? Not overheated, not crashing, but resetting. For buyers, this may be the most negotiable market in years. For sellers, pricing and patience matter more than ever. And for everyone watching, the next phase won't be about hype. It'll be about fundamentals. The era of panic buying may be over, but the story of Canadian real estate is far from finished. If you want to stay ahead of what's coming next, not the headlines, but the reality, this is the moment to pay attention, because markets don't change overnight. They change quietly.